New home construction, a key indicator of economic sentiment, has been in a year-long slump. Back in 2021, almost 2 million homes were constructed each month. This year, though, that number's been closer to 1.4 million, and economists have expected it to continue to decline. But last month, something strange happened. Data showed 291,000 new homes were constructed in May, a 22% increase from April. That's the largest percentage increase since 2016 and the largest absolute increase in more than 3 decades. Meanwhile, home builder sentiment has advanced to an 11-month high. So, Scott, the housing market is still hot. There's low inventory and home prices are still hovering near all-time highs. But this seems like a positive forward-looking indicator for the market, right?
Yeah, it's striking. I spoke to a Goldman analyst today. It's striking how resilient the home builders have been.
Right.
And what you have is housing prices really haven't budged much. Everyone's been calling for an apocalypse in home prices, thinking once their mortgage had to reset, that you would see a crash in home prices and home values. And it just hasn't happened. It appears that the marginal buyer still wants in, even at a 6 or 7% rate. They have been, I don't know, purposefully or accidentally constraining supply, so there just isn't a lot of supply there. And the home builders, Kaufman Broad, or I don't even know if they're still around, or Pulte have been announcing, incredible earnings. The housing market and the stocks, the home builders, have been surprisingly resilient. I think it's a bad thing. I would like to see a decline or a correction in housing prices. I think it's overdue.
Yeah.
I think people of your generation are having a difficult time getting in. But the reality is, from an incumbent standpoint, it's been good to own housing stocks and good to be a housing company.
Yeah. Yeah, I mean, it's interesting how the home construction is just completely reverse engineered to prices, because you look at housing prices, they're still extremely high. It's around $390,000 for a median existing home. And the reason for that is it's just a supply and demand problem where there are not enough homes. Existing home sales are down almost 25% from a year ago. And it all begins with we're not building enough homes in America. So I guess my question to you is, why do you think that is? Why aren't people building homes?
America has entered a projectionist luxury mindset, a kind of a NIMBYist mindset. And that is, once I have a college degree, I want to make it harder for people to get in, because that means that my value of my degree will go up.
Yeah.
Once I own a home, I show up to the local review board and come up with good reasons why we shouldn't approve that new housing development. And once I have a tech company, I spend a bunch of money on lobbyists to try and make it more difficult for new entrants, whether it's licensing, or if I'm a university, I do something called accreditation, which is run by the incumbents, that makes it difficult for the number of new universities has grown 0.4% a year. They have constricted supply, and universities, including especially Princeton, have ensured that despite these massive endowments, they don't want to offer that incredible opportunity. I mean, if you think about higher education, what if you had a drug that if you gave to somebody, it cut in half the risks of suicide, heart disease, diabetes, obesity, depression? They lived longer, they made more money, they could take care of their parents. Just this one pill. That one pill is called higher education, but we've decided to sequester that medication, that pharmaceutical, to 1/4 of our population at most, and elite colleges to maybe 3 or 5% of our population. It's morally corrupt. We are entering into, we have discovered, our nation has decided to pursue an LVMH-like strategy and employ scarcity. And the same is true in housing. We have so much zoning and permit constraints that it is very difficult. And I know this is someone who has tried to develop property, even in what is considered landlord or builder-friendly Florida. It's near impossible to build new housing because the incumbents have a vested interest in ensuring that new houses don't get built. So what does that mean? It means that when I graduated from business school in 92, in 1994, I bought a home in San Francisco for $285,000, which was, I was making $100,000 a year, or my offer out of school was $100,000. So I could buy a house in San Francisco for 2.85 times my MBA salary. I would bet an MBA salary now at the Haas School of Business is $150,000. I would bet the average house is $2 million. So it's gone from, and I'm guessing, it's gone from 2.8 to 12x. And that's just not sustainable. That means that people don't put down roots. They don't start saving money. They don't start families. So this is a real problem. I'd like to see some sort of statewide or federal legislation that says you can't hold up housing. And I don't know.
Yep.
I don't know how you do that. Florida tried to pass a law that made it more difficult to get in the way of new housing permits, and the local housing boards just stuck up the middle finger and said, sue us, and they continue to do it. But it's a NIMBYist, LVMH-like bullshit rejectionist culture that is taking up housing prices.
So those local housing boards, I assume it's just local residents. I mean, when we talk about how do we fix this problem, is it just going to have to be some sort of grassroots political movement where you convince these local residential housing boards that it's in the best interests of America to loosen up on housing permits? How do we even begin to fix this problem?
There was something pretty innovative in Florida, actually, and that is a developer, a builder, actually incorporated a city out in kind of a little bit inland. They essentially incorporated a city and said, okay, we are now the leadership or the council or the local government for what is now a city.
Yep.
Solely such that people couldn't get in the way. And they're going to build tens of thousands of units. So, the market, you like to think the invisible hand here will come in, but I do think there needs to be regulation that says, look, if you can't prove that the city is hugely impacted, that it's going to have some sort of crazy, you got to err on the side of creating affordable housing.
Yep.
That we should have laws that create a bias towards new building, not against it. And I don't know the best execution of that, but it is becoming an existential threat for young people. The majority of older people that build wealth through housing, they have, this is their retirement. It was my mom's retirement. It's forced savings. It's pride of ownership. It's, I think it's good for your mental health to have a home. A lot of economists would argue that over time, when you look at maintenance and insurance, it's not a good economic deal. I think that's bullshit. I think it's a lot of psychic return from owning a home. And the fact that we have yet again, taken another asset class, and I think it's the largest asset class in America. I think it's bigger. I don't know if it's bigger than stocks. It's either one or two, residential real estate, and sequestered it to the incumbents or the children of rich people. It's just, again, this is not America. It's not an America we want or that we recognize. And home ownership among young adults, age 25 to 34, was at 41.6% in 2021, down from 45% in 1990. 12.5% of this group lived with their parents in 1990. In 2021, it's now 20% of them. So, be careful, parents, about showing up to your housing board. It means that your son's going to be living with you until he's 40.
Yeah, no, exactly. And then finally, we should probably tie this back to macroeconomics. This was considered a good thing for Jerome Powell. It's an indication that the housing market is stabilizing. It's a roundabout way of saying this all sort of has to do with interest rates. Specifically, interest rate hikes were supposed to bring housing prices down. And this is an indication that maybe the housing supply will begin to bring prices down. But could you explain what the dynamic is between interest rates in general, and the housing market? Specifically, how do interest rates affect the housing market?
It's pretty basic. If your mortgage goes from 3% to 6%, your monthly mortgage rate is going to go up by 50%.
Yep.
And that's going to crowd out spending and other things. And it's also the first-time buyer that did the math and went to a bank and said, we have this much down payment and we have this much income and we can support this kind of much monthly mortgage payment, or we can support a monthly mortgage payment of X. The bank might say to them, okay, you can afford a $600,000 house. That was 2 years ago. That same couple can afford a house that's $400,000 now. So you would think that would pull down the prices of houses. But what's happened is there's been this artificial constraint on supply because people have such great mortgages. They're afraid to move, so they're not putting on their house on the market. I mean, something that's interesting, and the market's so creative here, is that investors and real estate agents are now treating mortgage rates as assets. And that is, Redfin has noticed a sharp increase in listings that are essentially selling mortgage rates from several years ago by transferring them to new buyers. So what they're saying is, let's structure a deal such that you take over my payments, and when the mortgage needs to be refinanced in 3 years or 4 years, you then have to buy me out. But until then, you're getting a below market mortgage, which means you can afford more house. And so essentially people are trying to monetize the low interest rates they have on their houses while entering into an agreement to sell their house. Also, it just appears people have built up a lot of equity in their house and don't feel there's no forced selling. So there's very little price discovery. You also have buyers who feel like they should be getting a deal, and you have sellers who aren't willing to offer a deal, and they don't feel an urgency or a sense of urgency to move because they have some money saved up, they have some equity in their house. The resilience of the housing market could best be described as shocking.
Well, hopefully this new data will be the beginning of the reversal of that trend. We'll keep tabs on it.